Hello, everybody. Welcome to our Friday This Week in Crypto call here at Santiment. It's been a wild week for those who have been a little out of the loop. Bitcoin dropped to as low as about 56K on most exchanges, and Ethereum dipped below 4K. This is only 10 days, or 9 days after, I should say, after the all-time high above 68.5K was hit for Bitcoin. So obviously we've had quite a slide. It got to just about 18% on the retracement end compared to where it was on the all-time high. So that's a pretty sizable dip. And the reason why you're seeing that over the past 7 days, we've got a mostly sea of red here going on in terms of price returns for most of the top 100 and the rest of the crypto landscape. We'll dive into exactly what's been causing this, how you should react now based on some of the key metrics, some standout projects that we can look into, and of course take your requests as you have assets that you'd like us to take a little bit of a special look into toward the end of the call. So make sure to drop your suggestions there, and we'll have a poll up for you to vote. As always, we do not want you to look at these calls as investment advice. What we do here is simply point to data and divergences that are going on based on historical patterns that have happened in the past based on what's similar to happen right now. So that being said, let's dive into what we've seen here, Dino. It's obviously been mostly retracement city, but obviously a few standouts. What are you seeing?
I mean, I think, by the way, can you hear me?
Yes.
Okay, good. First of all, hello to everyone in chat. I think this is going to be a very interesting call. We've got some very interesting charts over the last really like 24 to 36 hours. Generally, Brian, you and I had a couple of different calls with different communities over the last couple of days. And really, anytime that we were talking these past few days, my conclusion was always the same, which is we are moving in the right direction in terms of, I think this correction was much needed, simply because several metrics were pointing to overvalued conditions for a while now. I even wrote that in the weekly report, but I was not convinced that this is the end of the correction, simply because a few metrics were still pointing to overvalued conditions, and actually still are, some of them, suggesting that even though there was a need for normalization and resetting of overvalued conditions, I'm not like 100% sure that we are there yet. So what I have seen in terms of the social response, the sentiment response to this latest crash, I have seen a lot of euphoria. I have seen a lot of calls to buy the dip. Actually, one of the biggest sort of words or phrases, according to our data today on crypto social media, is buy the dip. So it seems like people are still very much happy about the opportunity to buy into BTC and the rest of the crypto market at a discount. So it seems like we have not yet completely abolished all of the hype and euphoria from the crypto markets. So that alone, I think, is a little bit concerning. On the other hand of the equation, however, there are now indicators that are starting to show bullish divergences. So we will talk about whales, we will talk about short-term MVRV, I will talk about funding rates. I think all of those charts and all of those metrics are now looking much healthier than they did a week ago, 2 weeks ago, and so forth. So while I am still slightly concerned about a few metrics that we'll go over, I think we might be sort of looking into a potential bounce back. Maybe not immediately, maybe we drop a little bit more, but in days to come. Now, before we really dive into specific metrics, we've got, I don't know, should I call him a special guest? Maxim, our Sentiments founder. He's here every now and again. So sort of a recurring special guest. And I wanted Max to be on the call today because we had a conversation earlier today, which I thought was very interesting, about where he thinks the market is right now based on Elliott wave analysis. So we don't really talk about, we're not Elliottians, Brian and I, and we don't really talk about Elliott waves a whole lot. But I think they are very useful sometimes, especially when it comes to this sort of market volatility. And Max when Max trades, he uses a combination of our data and Elliott waves. So for people that are already sort of in the world of technical analysis, I think it's very interesting to hear what he has to say. So Max, the floor is yours. If you want to share the screen, maybe show us like 5 minutes of or 10 minutes of what you've got going in your brain in terms of where we are right now and what is the likelihood of future price movement.
Okay. You know that I don't appear often. Main reason Dino and Brian doing great job, so most of the time. But there are some special occasions where some specific Elliott waves or let's say cycle patterns appear. And 4 years ago when I founded Santiment, I started from this. So it's a kind of special approach. And there is only a few things. I'll today a little bit to be sharing how to use potentially our sun-based metrics to spot patterns. I start sharing. Okay, I think this one is the right one. Now I think, what do we see? Probably trading view, yeah?
Yes. Yep, we're seeing trading view.
Yeah. Okay. So the structure is the same for Bitcoin and Ethereum. It's like 5 waves completed here. And if I open Ethereum, it will be a bit different first wave, but message is the same. 3, 4, 5. And this by itself, it brings a very strong message. I will tell later on. And what Dino mentioned, what we're discussing, I was saying that there are few metrics which you can use on Sunbase to confirm that the 5 waves move is kind of done. And this metrics they're related in a kind of volume. One thing, we have trading volume aggregated across all exchanges. Another is a social volume. And the last one, I will not show it, but you can use things related to on-chain trading, on-chain transaction volumes. Yeah. So the things you've been looking constantly, if you have an assumption there are 5 waves going on, it's like in the middle of the move, be it up or down, in the middle of the this 5 wave move, somewhere around the middle of third wave, you will see the most massive volumes. Trading volume from exchanges, social volume, transaction volumes. If it's on the way up, you will see the most massive growth of new addresses added to the network. Now, just 2 of them so that you know what I'm talking about. Yeah, you see this spike. Yeah, it's all about this area. The market, it's called like trigger point or realization of the crowd. So somewhere around 16, 17, the crowd or the most participant realize, oh my goodness, we're going down. Yeah, and this is typically middle of the third wave. And we're looking for it always. It doesn't happen so often, so quite clear. And it was on the trading volume, it was on the social volume. And what happens next? And it's like bottom came at that time, at that move, like if we're talking about Ethereum, I think it was like 4,150. Small correction, and we make a new low. And on this new low, you to confirm, to really get like 90% sure about the pattern, you want to see divergences. The new price extreme comes, but the indicators metrics, they're not making new highs. So you see trading volume was lower, social volume was lower. Brian and Dino will share something which is actually showing extremes, but they actually also confirms this, like people start suddenly move coins which are according to on-chain analysis in the loss. So once you see this, it's a rare chance. Say, oh, there's a high chance we've just made 5 waves down. It has 2 major consequences. Number one, there will be correction up. And it's already on the way. There will be correction up. But number 2, it's even more important. There will be continuation of this 5 waves down. So, and it's a major message where I think we're not done yet on the way down. Just we need relief rally. Yeah, and the social data, and I think Brian did yesterday great overview. There is already quite bearish sentiment, and people on Twitter are going to, I don't know, to 50,000 and everywhere. Yeah, we are, but not now. Yeah, it just need to confuse more participants. They get again excited, and then maybe we'll going down. And the areas I would be looking now to, if you're shorting the market, it's somewhere between 38% of the whole move, which is rare but possible. More likely 50 and most likely 61%. So these areas, for those who are shorting, yeah, need to think you can take a risk, go down. And I think that's it. This is a main message. And as I said, the picture is the same for both Ethereum and Bitcoin. Just levels are a little bit different. If we take Bitcoin, we're looking mostly, I don't know, 62,000. Let's say around 62,000, the end of correction. Yeah.
So Max, for a Elliott Waves rookie like me, so how are you finding these edges on the 5 waves of the Elliott Waves? In other words, how do you find the 1, 2, 3, 4, and 5? Is it just the local bottoms and tops for the last 5 movements, and if they go down, it's bearish, or is it a little more complex than that?
That's a good question. It is intellectually complex, but once you understand it, it's much more easy. You don't look for these 5 waves moves. You wait till something happens and you see, because it's better to wait. It's better to wait and see. And as I say, you observe these metrics we're having on Sunbase. Yeah, most of the transaction volumes. I didn't show daily active addresses. Are also shown very nice. Always at the bottom, so extreme tops, they start showing divergences. And once you start seeing divergences, you see, okay, what are showing other metrics? And you look, okay, where was the biggest interaction volumes? Because it's biggest interaction volumes, it means it's somewhere where crowd realized they jumped on the wagon. Wagon is German, what I think, I don't know what is English, on a train. Yeah. And it's if you have this kind of things, it's most typically third wave, this massive growth of everything, mushrooming, like Dino likes to say, everything mushroomed. Yeah. It's a third wave. And we had it also on the way up. It's just on the way up before we corrected, this 5th wave was like pain. It's extended and extended and extended. In this case, seems to be more clean, but yeah.
So Maxim was showing good trading volume and social volume. I think at the previous all-time high, it was very, very okay, you're showing it right now. It was very inflated, which is usually sort of typical for the third wave, right? Most of the activity is concentrated in the middle of the move, and then because currently both social volume, trading volume, even transaction volume is lower relative to this previous peak, it seems to confirm this idea of us sort of forming the 5th wave, and there, from an Elliott wave perspective, might be a correction up, right?
I'm trying to load, but it looks like my computer is super busy.
It's okay.
Maybe eventually, yeah. Mm-hmm.
Yeah. I think we can, Brian, you can take over if you want, and we can start by looking into some on-chain stuff for Bitcoin, because there's a lot of things that we want to cover, and also questions to take from the chat. So let's go into specifically a few metrics.
Just to finish, it's loaded. You see here in August, what we had in August, the most massive volumes have been here. Mm-hmm. It's in crypto a little bit after the middle of this. And then once we pushed one more time, actually that was even more clear because we have a triangle before. Everything came on lower volume, trading volume, social volume, and when we look on the daily active address, everything was lower. So it's a quite typical sign. Here it was very difficult to understand. It's kind of was pushing, but even though I don't know if you discussed it last week, there were a lot of divergences on daily active addresses and actually on trading volume too. One can see it's kind of going down.
Yes.
Yeah. It's like so you had here. Let me remove. So somewhere here is a peak. So again, it looks like behind or after middle of third wave, and after that we're pushing, but volume goes down, and it was the same picture for daily active address, if I remember correctly. And so it's simple. Brian, answer to a question. Once you get it, you have a collection of 5 metrics which you check constantly. It's simple, yeah. But the difficult part, patience. I myself sometimes fail. You know, my calls sometimes they're cool, but sometimes I just pull the trigger early because I'm not patient.
So Gary can share in chat. There's an article that Max wrote about a year ago called "How to Use Multi-Volume Analysis to Figure Out Where We Are in the Market," which kind of takes a lot of these principles, how to use trading volume, social volume, and daily active addresses as sort of a proxy for on-chain volume, and compile these 3 metrics to figure out which part of the cycle we're in. So Gary, if you want to share, or Max Bartel, if you want to share in chat that article. I'll actually find it afterwards if you can. It's somewhere deep, nested deep in our insights. But anyway, this is where I wanted to start. Thanks, Max, for a little bit of technical introduction to the current move. Now, Brian, stuff, if you want to take over the screen, let's start with actually, instead of network level metrics, I want to start with a few metrics from an on-chain perspective that tell us whether people are panicking or not. And the 2 that I want to start with are network profit loss and exchange inflow for Bitcoin. And you can use those 2. You can put them on separate charts. Let's start with network profit loss and then put exchange inflow on the chart below, just so we can compare them. So the first one that I want to look into is network realized profit loss for Bitcoin. So for people that are not familiar with this metric, we sometimes show it on these streams, sometimes we don't, but I usually point it out in my weekly report. So go back and read the one that I wrote on Tuesday. Network realized profit loss is a metric that, using on-chain data, tries to visualize the total daily ROI of all blockchain transactions. So for every unit of Bitcoin that moves on the blockchain, let's say there was a unit of BTC that was moved at the previous all-time high, right, a couple of weeks ago. We take the price at which it was moved, and then we assume this was its acquisition price or buy price. And then the next time that same unit of Bitcoin moves on the blockchain, let's say it moved today after the correction, we take the price at which it was moved now, and we assume this was its sell price. So the difference between these 2 prices for all daily transactions becomes this metric. And as a result, when you see big spikes in network profit loss, this means that at this point in time, the units of Bitcoin that are moving on the blockchain are moving at a profit, sometimes significant profit, relative to the last time they moved on the blockchain, basically relative to the last time they changed addresses. And then when you see dips, and this is now we are seeing dips for the first time in quite a while, when you see dips in network profit loss, that means that on average, units of BTC that are moving on the blockchain in the past couple of days are moving at a significant loss relative to the last time that they were moving on the blockchain. Now, I want you guys to still think about this, and I think we mentioned this last week as well, but we are still at very expensive levels for BTC, like anywhere between 55 and 60K. It's still in the sort of top 5% of Bitcoin's prices ever, right? There have only been a couple of weeks, up to maybe now a month, that Bitcoin's prices were able to maintain levels higher than this. So the fact that even with these sort of almost historical highs for Bitcoin's price action, we are seeing the 2 dips in network profit loss coinciding with the beginnings of the correction today and then a couple of days ago. That means that the majority of on-chain transactions in the past couple of days seems to be dominated by weak hands or holders that have acquired their units of BTC at prices higher than this. So probably, I would guess, in the run-up to this rally, maybe even back in April and May, when Bitcoin was first breaking 55K. But I would say more likely it is that we are seeing people and addresses and entities that have acquired BTC in the previous month and a half period that are now starting to lose their mind and panic a little bit and move their BTC at a loss. So generally speaking, I like network profit loss, even though it makes some assumptions because it's a metric based purely on on-chain data. And it assumes that all transactions are speculative. They're buys and sells. It's very binary. There are no other potential use cases that this metric takes into account. It's either coins are buying or coins are being bought or coins are being sold. So obviously it's not a perfect measurement, but I think it's a very good gauge sometimes of the average sentiment of a coin's holders. So the fact that over the last couple of days we have seen quite a lot of actually some of the biggest drops in net profit loss in the past 3 months, I think that points to a period of weekend redistribution and weekend capitulation in the short term. I have published an insight a couple of days ago. You can go back to our insights page and check it out. The insight is called Spotting Weekend Capitulation Feed Sand. Sand is a coin that has been pumping quite rapidly in the past couple of days, and Sand had a massive drop in network profit loss right around its latest bottom, suggesting that people were basically flooding out of the coin. They thought that there was no chance that this coin is going to start recovering. There was generally a network-wide sort of effort to dump sandbox or sand. And sometimes when these network-wide capitulation events, weekend capitulation events happen, if there is enough buy the dip pressure, it can actually be sort of mark a directional change in a coin's price action and move the price back up. So generally speaking, this is one of the pain markers that we like to look for when the market is dumping. We like to look for signals that the market and market participants are anxious, in pain, worried about the future, because it points to oversold conditions and undervalued conditions if other fundamentals are strong. So this is, Brian, metric number one. And then if you can shortly flash the exchange inflow and just zoom into the last month of data, just so we can see it a bit more clearly, because there have been some very big moves in exchange inflow data for Bitcoin previously. So I want to zoom into the last month. And there you go. So this metric shows the total amount of BTC that is moving to known exchange wallets. Similar to Bitcoin's network profit loss, there are massive anomalies in the last couple of days. So while a lot of people or addresses seem to be moving their coins at a loss, at the same time we are seeing quite a lot of Bitcoin being moved from coins that from addresses that we have labeled as just private individual wallets to addresses that we have labeled as exchange addresses. So there seems to be quite a lot of sell-offs in the past couple of days. And based on the previous metric, we can sort of conclude that at least some of those sell-offs are coming from weekends particularly. So generally speaking, there seems to be markers of a little bit of pain, a little bit of general concern about the market, and this is where you like to be, right? If you want to look for potential entry opportunities, you like to be at these sort of blood in the street levels. Now, I am still seeing a few sort of indicators that are holding tight, even though I would like them to dump and show this type of pain. But these are at least, like, for the short term, Brian, I think these are decent signals that the market is feeling the burn, right?
Yep, absolutely. Especially these big spikes in exchange inflow. If you were watching these at the time of, the end of the first big dip here that occurred on the 15th going into the 16th, huge waves on the 16th, 17th, 18th, before the final dip that occurred that got us down to about 56K. And these, I mean, historically, the majority of these big exchange inflow dips do tend to coincide with future downward movement. Not in all cases, but you can look even before these big four. This one here on November 3rd, big wave down. This one here on October 29th, mild wave down afterwards. This one, exception, absolutely. This one, of course, we saw a rise.
Yeah,
but
I think actually they happen at just anomalies for price, right? They can mark both tops and bottoms in my experience.
I've seen, all things considered, you'd rather not see the exchange inflow spikes if you're a bull. But you're right, I mean, on the midterm scale, it can sometimes just be a drop in the bucket. But the larger those inflow spikes are, at least in my experience studying these inflow spikes in the past, there is at least some temporary downward movement that tends to happen, unless, of course, there's like some outflow shortly after to compensate for it, which happens all the time. We're, of course, only looking at inflow, but we also have exchange flow balance that can often tell a great story, because sometimes there's just a ton of exchange movement on both sides of the coin, and you can see a spike like this with a spike on outflow.
Yeah, so generally, exchange inflow, obviously, all that it points to is that a lot of people are selling. So I also think it's very important where people are selling. Like, are they selling while the price is pumping? Which could just mean like pure profit taking, and then it's a lot more difficult for the bulls to absorb that sell side pressure because they would need to buy all of these coins at a premium. Or are we seeing a lot of people selling while the market is dumping? Because at that point, if there's a lot of buy side pressure or buy the dip pressure, it could sort of point to like, yeah, maybe short term there's going to be some downward price volatility, but it's much easier to absorb that sell side pressure while the market is tanking if there's enough people believing in the in the directional change. So I don't want to sound too bullish, but I also want to cover a few more bullish metrics. Because I mean, there's quite a few positive ones, even though I don't think we're sort of at the end of the correction. The one that I wanted to cover next, Brian, is the one that we shared in the thumbnail of this video, which is what the whales are doing. So this is quite big, at least for me, because we have been talking about the behavior of large Bitcoin addresses for months and how they have been very underwhelming. So what Brian is showing here, green is the price of Bitcoin, and then yellow is the combined balance or the total balance, total amount of BTC that is held by addresses owning between 100 and 10,000 BTC. So that is quite the range of addresses, but you could like confidently say that all of these addresses are whales, right? These are all millionaires to billionaires in terms of holdings. And it's very important sometimes to keep an eye on addresses that might have a disproportionate impact on market's price action. So over the last really like a month and a half now, we have seen the total holdings of these addresses start to decline. Even into the all-time high push, they have started to decline, suggesting that large addresses, whales in particular, have been possibly offloading parts of their bags and maybe de-risking and taking some profits, right? So over the last month and a half, there has been a sort of, I think, between 80,000 and 100,000 BTC dump away from these addresses. Now, in a grand scheme of things, this is peanuts. They still hold about 9 million Bitcoin overall, these addresses, right? So 100K is, whatever. But from a short-term perspective, it's more than enough to dump the market. And also, it's just a sign that we are seeing some lack of confidence by potentially large players. So what I was very sort of pleasantly woken up to this morning was this spike finally in the holdings of large BTC addresses. So they have started seemingly to possibly accumulate into the dip for the first time in essentially a month and a half. Now, this is still a relatively small dip. It's just between like 15 and 20,000 BTC, but it's the trend that I think matters a lot here. So remains to be seen. I think it's very early days still, but the fact that this is sort of pointing to a potential bullish divergence, specifically in a point of time where it seems like technical analysis is looking well, some other on-chain and off-chain metrics are looking okay, it could be a decent sign for short-term price recovery. What do you say, Brian?
I 100% agree. I think that we've been on quite a slide here, obviously going all the way back to October 25th, where we had at least this whale tier shed about 1.23% of their total holdings. And when you talk about a total holdings that they hold, that's a massive amount of, what was it, about 120, 130, Dino?
Yeah, I think it was about 100, like, I'll check right now, but I think it was about 100K BTC. So, I mean, it's in billions and billions of dollars worth of Bitcoin.
Yeah, but just here in the past 24 hours-ish, maybe 48 hours-ish, they've rebounded, and they're back up to about 49.1% held on the supply, added about 0.5% to their holdings once again. And that's significant, especially in such a short period of time. So obviously the long-term trend, keep in mind, October 25th until now, we're still down. But, look at the really long-term trend from mid-May until now. And they were sitting at 48.3% 6 months ago. And all things considered, they're up about 0.8% in the total supply held by them now. So clearly whales hold more now, even with the price up compared to where they were 6 months ago.
So I just checked this decline, like a month-long decline. It was 100,000 BTC that has moved away from these addresses. In the last 36 hours, 40,000 BTC added to these addresses. So it's
Wow.
it's a lot. It's a lot of money added back to these wallets. So obviously, the way that I like to look at this chart is looking for sort of midterm trends rather than immediate spikes or dips. It's much more relevant to me and effective if we see sort of a week-long, a month-long accumulation period, like we've seen before the rally even started back in October and September of last year. Before the rally really started for BTC, we have seen large Bitcoin addresses start to accumulate already, but it's the beginning of something potentially strong for Bitcoin's chances of price recovery. Now, one other, we're continuing, unfortunately, with potentially bullish metrics, but it's just, I guess, what I'm seeing on the charts. One other chart, Brian, that I really like to look for at this points in time when there's a lot of potential fear in the market. People often ask me, and I think we were on a call yesterday, and was it yesterday or the day before? Somebody asked, like, how do you spot, okay, it's okay for you, it's relatively easy to spot places where people are dumping, right? Where people are and addresses seem to be de-risking and liquidating some of their assets. What are the potential metrics that you can look for to find proof or signs of potential buy-side pressure, right? So one metric that we look for is exactly what we just talked about, the whales. However, the one that I like to really pay attention to is the exchange inflow of stablecoins in particular, right? So I've talked to Max about this before the call. If we can lock in the price of BTC, Brian, and then there we go, and then plot it against the exchange inflow of USDT to start with. There we go, and let's look at the last a year of data. So what we're seeing here, guys, all right, we're seeing the total amount of USDT or ERC20 Tether moving to known exchange wallets versus the price of Bitcoin. All right. So this is by no means a consensual sort of opinion, but there are on-chain analysts that believe that when there are massive spikes in exchange inflow of stable coins in particular, this could point to a period in time where stablecoin holders are looking to exchange their stablecoins for more volatile cryptocurrencies, because there isn't a whole lot of reasons outside of staking on particular exchanges. There isn't a whole lot of other reasons why you would put massive amount of stablecoins to exchanges, especially when the market is dumping like this. Obviously, another reason could be arbitrage. However, we are also seeing a pretty big spike in the net flow of Tether to exchanges, suggesting that just a lot more USDTs moving to exchanges than is being withdrawn from exchanges. So generally speaking, we are seeing quite a big inflow of Tether to exchanges, suggesting potentially that there are addresses and large stablecoin holders that might be looking to buy back into the market. And as you can see previously, there is some precedent to the idea that large inflows of stablecoins to exchanges can mark local bottoms for BTC. We have seen it back in February, back in April, May, and then more recently, we have seen it in August and September as well. So there have been like anomalies in stablecoin exchange inflows that have sometimes marked local bottoms and a potential for short-term price recovery. And it's not just USDT. Brian, if you can show us what USDC, the second biggest stablecoin, is looking like, you're actually going to see a very similar picture. You're going to see a lot of USDC being moved to exchanges over the last 24 hours. So let's see what that looks like. Voila, it's basically, I think, even more pronounced. A lot of stable coins. Basically, a lot of stable coins are moving to exchanges in the last 24 hours. It's USDT, it's USDC, it's DAI, it's BUSD. Across the board, we see anomalies in terms of net flows of stable coins to exchanges. So then you need to decide for yourself what this means. As I'm saying, like I said, one potential explanation is obviously arbitrage, is that in the times of elevated market volatility, there are opportunities for stablecoin holders to make profits on arbitrage. However, since we're seeing net flows for a lot of these coins also be in the positive, that means that on average, there's just more stablecoins moving to exchanges than being withdrawn from exchanges. So there is some additional level of inflow that isn't accounted for by arbitrage, right? So then the other possible explanation is, are people moving stablecoins to exchanges to buy other cryptocurrencies with them? So exchange them for, USDT BTC pairs, USDT Ethereum pairs. It doesn't really matter. Although obviously USDC and USDT are some of the most high volume trading pairs with Bitcoin. So generally speaking, I think it's also a potential signal that we might be looking at some buy side pressure. Whether it's enough remains to be seen. But it's hopefully an optimistic sign for the short-term price recovery of BTC. So that's as far as on-chain metrics that I wanted to talk about that are looking potentially good for BTC. There are others that are not looking as well. But Brian, if you want, we can maybe look into some social and off-chain data as well, because we're already sort of in the 30-minute mark, at the 30-minute mark of the call.
Absolutely. So for those familiar with this or not familiar with this page, this is our social trends page. You can easily find it just by going to charts, social trends. You'll also find it right here on our homepage. You'll see it just below the main screener area. You'll see this top 10 here, which is indicating the top 10 hashtags or just general subjects that are currently seeing a big rise on the crypto platforms that we track on our platform, that being Twitter, Discord, Telegram, Reddit, and some various pro traders chats. So all of this public information is scraped into our database, and we see the frequency of the amount of words that are being spoken on these platforms, and identify which ones are at their highest range versus their median, or essentially their average. And right now, number 1 and number 3 are directly related to price. Dip and buy, of course. We also see bot, we see panic. So clearly people are very polarized right now. Some are, a bit concerned. Some are, super bullish. Something like the word panic actually arguably is more indicative of people poking fun at people. It's not exactly a bearish word, because this is usually a word that's mostly spoken by bulls who are saying that if you are selling right now, it's irrational, right? But if it was the word like sell or sold, that would actually be indicative of people who are legitimately more bearish. So all things considered, most of these big words, buy, dip, buy, bot, and even panic, they're all kind of on the bullish side, indicating that people are quite comfortable with this dip and viewing it as an opportunity right now. But we look over here, and one of my favorite charts to look at when things start to get really polarized like this, and you see like a 17-18% drop from the all-time high just 10 days ago, these are the times when you really see the mass crowd start to have a uniform opinion one way or another. And that's sort of what we're seeing right now. We're seeing obviously the biggest spike in the words buy dip or buy dips in about 2 months. The last time was in September 25th, which actually was a pretty good dip buy opportunity that the crowd got right, at least temporarily. And that tends to be what happens with dip buy calls, is people are very much interested in an obvious dip buy opportunity. When we're at 15% plus retracement, people who've been around crypto long enough have kind of figured out that this is a pretty good opportunity, or at least a lower risk opportunity, to buy and put more on your positions. And when it happens in large numbers, you'll often see the crowd be able to will the price up for the short term. But then long term, if they're still, starting to FOMO in, that's when they start to get punished. So one thing I look for is whether, I'll zoom in here just a little to like the last month or even the last few weeks, but I just want to look at this right area here where you can see that, buy dip enthusiasm got very heated about 4 or 3 days ago on the 16th. We saw a very, very mild one here, followed by just further downside. And then look, the blue spikes here indicating buy dip are kind of slid down where people were disinterested again. And then another one here where people were trying to buy the dip happened for a very short period of time. I know the colors are kind of clashing, but there was a very small rise here and then a further downside. And that's quite typical with, the crowd getting too enthusiastic about buying the dip. Alternatively, look at the big red spike here indicating people are shorting. And as people started saying that, which was, of course, the largest we saw since the all-time high, we saw a rise, which indicated that if people were actually putting their money where their mouth was, they were getting kind of liquidated here, similar to what we saw right before the all-time high. This was a day before, and this was the biggest spike we saw in the last month. A day before the all-time high, biggest spike in shorts, huge rise, which likely led to some liquidations, and then the actual retracement happened. So the retracements often happen after people are over being bearish, and the big rises happen right after people are over being bullish in mass quantities. So that's my take on this, Dino. What do you think?
Yeah, so I think I mentioned this in the weekly report back on Tuesday. So if you can zoom out to the last, maybe remove shorts and just leave the buy the dip phrase and zoom out to the last year of data. Because I talked about this specific chart in the weekly report on Tuesday. And I said, look, guys, based on a lot of our metrics, Bitcoin took a hit. At that point, it was like down 10%. So that was the first leg of the correction. And we saw a big spike in buy the dip mentions, and we've also seen a big spike in social volume or social mentions of Bitcoin, as well as the total sentiment towards Bitcoin. So all of our metrics were high, suggesting that the crowd was actually quite interested in buying into this dip and were expecting quick returns. So in the report, I said, it seems that the social chatter is still leaning bullish, which may point to excessive retail greed and present an obstacle to short-term recovery or short-term bounce back. And if you look at this chart, the last year of data, right, there have been several times that the crowd was starting to say buy the dip too early. It happened in April, it happened in May, it happened in September. There are these cyclical patterns almost where these buy the dip calls come too early relative to what the market action is probably going to look like. So usually the moment that the Bitcoin starts to correct, we see an inflow of, vultures and people hoping to make a quick buck on the price volatility, and they start spamming buy the dip calls to pump their bags. Generally speaking, even though it might lead to a short-term bounce back and short-term recovery, it's usually a sign that a further correction or further downtrend is likely, at least. So it's not surprising to me that we have seen today another drop, because back on Tuesday, it was really the first time that the crowd really started calling for a recovery. And generally, if you follow our streams and read our insights, you know that we're not fans of increased chatter and increased or predominantly bullish sentiment about coins. So based on a few backtests that we've done on our social data, usually these euphoria markers are not great for a coin's price action. Usually they coincide either with local tops or periods of consolidation for the price of the coin. Very rarely, relative to the other side of the equation, do they present an opportunity or an opportune time to maybe accumulate a particular coin. Obviously, there are exceptions to this rule, especially during bull markets, but more often than not, they are sort of indicators and insignia of market euphoria and overvalued conditions. So for people, by the way, that don't know how we measure this and how we track social data, so currently we track about 1,500 different crypto-related social media channels. We track Telegram, we track crypto subreddits, we track crypto Twitter accounts, professional trader chats, crypto Telegram groups, everywhere that we think the main topics of discussion are related to cryptocurrencies. We listen in on those conversations and we show you what the people are talking about. So then, Brian, maybe it's a good idea also to show us what Bitcoin related sentiment is looking like today. So what we do is we take all of these messages that are mentioning Bitcoin on a daily basis, and we put them through a machine learning algorithm. And this machine learning algorithm, it labels them as positive, negative, or ambivalent to tell us what is the average bias towards a coin from the crowd. So interestingly enough, this chart is showing a massive spike in sentiment around the first correction, right back on Monday and Tuesday, that 10% dump, the first dump. There was a big spike in sentiment towards Bitcoin. And not just towards Bitcoin, it was the same thing for Ethereum and a few other top caps. So generally speaking, the crowd was expecting, the retail sector was expecting a very quick bounce back. And it's usually what they expect. And then over the last 24, 48 hours, this chart is once again starting to reset and move back into actually slightly neutral to bearish territory. And this is where generally you would like to live as a person that is maybe looking for a potential opportunity to move back into a market. This is where you would like to be. Even lower than this, I would say. I think we're actually still relatively high. I would like us to reach these levels that we did back in early September and August, where we were mega bearish on Bitcoin's potential. So this is why, for example, I think even though we're moving in the right direction, there is more downsides to be had before the market is really completely rid of this euphoria. And so also, the same thing can be seen on derivative side, right? If you look at funding rates for Bitcoin, which is sort of the fee paid by one side of the perpetual contract to the other, funding rates tell you whether the derivative market is bullish or bearish on average. So when funding rates are high, it means that Bitcoin longs are paying Bitcoin shorts and the derivative market is bullish on average. And then when it's low, it means that bears are paying, shorts are paying longs, and therefore the market is bearish mostly. So in the past couple of days, with the correction, we have seen a lot of long liquidations. I think in the last 4 days, there were $1.1 billion of long liquidations. It was 800 million on Tuesday, and it was about 400 million today. So overall, it was quite a lot of longs being sort of shaken out of the market, which is necessary and healthy, I think. And as a result, the funding rates on most high volume exchanges have tanked back to neutral territory. So it's kind of like social sentiment, just on the derivative side. It's a similar vibe. The first leg of the correction, people were still kind of euphoric, kind of happy. As the correction continues, more and more people are getting wrecked and more people are getting scared. So similar to social sentiment, though, we're not still back to like early September or late August, early July levels. You see those very low dips or actually negative values of funding rates. That points to or sort of suggests a point in time where the derivatives market was actually very, very bearish. And usually it seems like bearish undertones or bearish atmosphere is more opportunistic for Bitcoin's price rallies. It's a fertile ground for Bitcoin to start to recover. We're not there yet. At the moment, we've just normalized back to neutral, but there is still room for us to drop. There is still a room for both the social crowd and the derivatives crowd, and also holders, to move back from sort of undecided and neutral to very, very concerned. And we're still not there yet. So this is why I think even though some markers are pointing to potential bullish conditions, there are signs that the dump was not strong enough, that it needs to be that it needs to go even further down. So we're about 47 minutes in, which is already quite high. So let's start taking questions from the chat. Guys, tell us which coins you are looking into the last couple of days and which coins you would like us to look into, because I know there's a lot of alts and alt holders that are currently in pain, panicking maybe a little bit. So let us know what you would like us to analyze, maybe do like a 5 to 10 minute analysis here on stream. Bonus points, like I always say. Okay, so Max has shared a poll. Bonus points if the coin that you would like us to analyze lives on the Ethereum blockchain, simply because we have more data for those coins. So we support on-chain data for all ERC20 coins, as well as Bitcoin, Ethereum, XRP, and a few other blockchains. But even if the coins that you want us to see don't fit that mold, even if it's like another L1 or a coin that lives on, I don't know, Solana or something, we can still look at social volume for that coin or social metrics for that coin, development metrics for that coin. So we can still sort of do some analysis. But if you want to look at stuff like network level activity, exchange related metrics, MVRV. Those types of metrics are currently exclusive for Ethereum coins and the other coins that I mentioned. So Brian, while people are spamming in chat what coins they would like us to see, one last thing that we might want to look into is MVRV for Bitcoin, because now it's looking quite healthy, right? I think currently it's, I don't know, is it like 8 or 9%?
Negative 6.4% at the moment. Yep.
Okay, yeah. So it went down to, I think, minus 8% or something like that. So MVRV, for people that don't know, it's a very popular on-chain metric. And what it does is it shows the average profit, or in this case, average loss of a group of holders. So currently, the average loss of Bitcoin holders or of all addresses that have acquired Bitcoin in the last 30 days is negative 6%. So they're down 6% in their initial investment, right? So the way that people use this metric is the lower the MVRV, or actually let's start with the opposite. The higher the MVRV ratio gets, the greater the unrealized profits. And as a result, the more likely it is that people are going to start claiming these profits, and there's going to be a lot of sell-side pressure, right? And then the higher the MVRV gets as a result, the more risky it can be to enter into a trade, because you're entering into a trade against a lot of money sitting on the sidelines that can, sell you their bags, and you're just left holding nothing. And then on the other hand of the equation, the lower the MVRV gets, according to at least some on-chain analysts, the more undervalued the coin and the more opportune time it can be to enter into a trade. So currently, we are at about minus 6%. So the way that people use this metric is they look at historical trends. Brian, let's look at the last 3 years of data maybe to see what are the historical highs and historical lows for Bitcoin's 30-day MVRV. Because we're approaching those historical lows. We're not there yet. Right, we're at about minus 6%, and generally speaking, I think it's between minus 15 and minus 20%, where historically speaking, over the last 3 years or at least, Bitcoin usually starts to bottom out, and we are at sort of unsustainable levels of correction. And there's a sort of a need actually for price recovery rather than further downtrends. So we're not there yet, but we're definitely moving into that right direction. So this is another sort of signal that, a lot of people are in pain. A lot of people are actually below break even. And at some point in time, we have a support at around minus 15%. Now, I will say this is only the case for short-term MVRV ratio. If you look at the long-term MVRV ratio for coins, Bitcoin, Ethereum, XRP, whatever, it's still very high. So Brian, let's just very quickly flash the 365-day MVRV ratio for Bitcoin. It's still, I think, at about 28% or something like that. So there's still, on average, the profits of long-term or longer-term Bitcoin holders are still high. They're at about plus 30% almost. So there's still money that they can dump on the market. There's still profits that they can take. And as you can see, relative to the previous bull cycles, yeah, we're far away from historical highs, but we're also nowhere near historical lows. So really, if we're still sort of in a super cycle, this isn't really a metric that you should pay too much attention to. But there is still more downside to be had if people start dumping their coins. So in the short term, yes, there's quite a few metrics that suggest, okay, we might be looking at a recovery, but some macro indicators are still kind of looking iffy. So yeah, keep that in mind. Anyway, Max, let us know what the people want us to look into. What are the favorites?
The first place is Olympus, Ohm.
Oh, okay. So let's
Followed
see
by
what
Veracity.
Okay. Yeah, so Brian, you want to maybe look at network level metrics for Rome?
You bet. Yeah, so we'll start with daily active addresses here. And over the last year, it definitely looks like a good sign. Obviously, a very volatile coin. I don't know a ton about the price action. It is a highly valued, relatively speaking, to most other altcoins asset. However, as of now, it looks like it's retraced since October 25th. So give or take about 3 to almost 4 weeks ago, the price has dropped about 40% at the time of this show. We saw the largest spike in daily active addresses occur on October 14th. Things immediately came back down. So this was clearly a bit of sell action going on here. And we can check that actually by looking at active deposits.
Yeah, so I think if I'm not mistaken, that Ohm is an algorithmic stablecoin. So similar to what's that other one, Max? You know, what was the one that was very popular like 6 months ago? The algorithmic stablecoin.
No, almost different. It's different. Olympus, they're doing. It's called now DeFi 2. They're doing quite some innovations in terms how bonding tokens, how to distribute them. They're doing good experiments.
Okay. Yeah, I think
you wanted to say Fei, yeah.
Oh, right. I might be confusing.
No, it's different. It's different.
Yeah, yeah.
It's not really a stable coin. It's like you bring different liquidity coins as collateralization, and then it generates some profit. It's a bit complex to explain in few words.
Yeah.
But I even was looking into it when I was designing our tokenomics for Sana. It's interesting things they're doing.
I know that there's a few whales. I think Tetranode is a big proponent of Ohm and a few other. It's got a very like active community and a lot of whale backing. So I'm interested in to see what their metrics are looking like. Sorry, go ahead, Brian.
Yeah, no worries. So check this out, guys. Even though active addresses look fantastic, especially in the last 3-ish months here, take a look at where the active deposits started to explode. We really started to see these active deposits right at the all-time high here when it was at about 1311. And then we saw the actual biggest spike in active deposits about, give or take, 10 days later before this second correction, before the second local top, that is, happened. And it really, even though both are up, the fact that active deposits are so high is going to be a bit concerning because it clearly means that many people are moving their Ohm onto exchanges with the purpose of likely selling some. And until these pink spikes start to cool off, it's going to be a bit dicey. And it definitely is a big contributor to why the price has dropped 40% over the past month. We'll have to see how it cools off. But you can also, since this is a good opportunity to show it, you can also combine metrics by doing something like daily active addresses. Do not hit the chart just yet, and then go to active deposits, click that, and then you'll see this combine button here. And you can actually take the two together and go, all right, X1 is daily active addresses, X2 is active deposits. I'm going to divide them and see what the ratio is. And I'll just call this DAA divided by DAD for active addresses and active deposits. Hit combine, we'll put it on, we'll just put it on this chart and get rid of circulation for a minute. And now we can actually see the ratio of active addresses divided by active deposits. And look where the biggest ratio was. It was right here, right before the local top. All things considered, it's actually good when you're seeing this pretty stable. When you're seeing the big spikes, that's indicative of there being a higher proportion of address activity to deposits, which can create volatility. So for example, you saw here, this was pretty much right after the local bottom. This was right at the local top. This was right before the local top. This is an interesting combination of metrics where you can find some pretty good insights and kind of identify when it's starting to stable out, which it is now. And I would call this a good sign more than anything else, the fact that things have mellowed out. But ideally, we'd want to see it mellowed out while also being a bit higher. So something like what we saw in mid-August, which was right at the local bottom. That's a good sign, in my opinion, and what we ideally would want to see. A few other metrics that would be worthwhile. I think the 30-day MVRV is definitely worth checking out.
And also, Brian, network growth.
Network growth, good one, yep. Let's see, I'll get rid of that for a moment. Just look at the last 3 months. So we are in a good negative territory right now, guys. Actually, a big negative territory. Yeah, negative 24%. That's obviously below the around negative 15% threshold that we begin to look at as an opportunity zone, regardless of asset. And all things considered, because of the 40% retrace, many people were definitely on the, loss side of things and we're riding this wave down, which is why the MVRV got so low. Let's also take a look at network growth, as Maxim here is suggesting.
We can also check out the supply on exchanges. I think it looks quite interesting for the coin.
Yeah, good point. So on the network growth side, I'll zoom out here just to the last year. It's likely going to look somewhat similar to daily active addresses.
I mean, it looks good.
It does look quite good. It looks better than daily active addresses in the respect where, especially right after these two local tops, you were seeing tons and tons of new addresses being created. So people were interested in this price action, and Ohm was getting more and more activity, new participants, and that's exactly what you want to see for the long-term sustainability of an asset. And Dino, one more time, what was that metric you were suggesting?
Yeah, let's look at supply and exchanges. So somebody in chat could tell me whether there was some event that I'm missing here. So supply and exchanges for Ohm, it's the first metric, right? There you go, right there. So for whatever reason, I'm assuming that Ohm got listed somewhere at the end of September, because before that, the amount of Ohm on exchanges is flat. And all of a sudden, we're seeing a massive amount of Ohm being moved to exchanges. So there is already, I think John is saying in chat that there is some potential sell side pressure from, where is it? 684 Ohm forks that can make up for some of that selling pressure. So if you can let us in chat know a bit more, John, about what exactly, like, did they have vested coins, or was some amount of supply released, or what exactly, why would they be selling? Because for whatever reason, in the last month and a half, there's been, I mean, that's like a 500% uptick or whatever. So from basically almost nothing, no amount of Ohm living on exchanges, we now have almost 5% of total supply of Ohm living on non-exchange wallets. So that's generally not a great sign. It is if I guess it's not that bad if it's just the sort of the coin got listed and maybe there are some trading competitions that are incentivizing people to trade and move their Ohm, so that there's, there is some sort of almost artificial exchange related volumes. But generally speaking, we see this type of divergence very often, where a coin's price action is moving in the negative direction while the amount or supply of coin on exchanges is moving in the positive. Generally, there's all other things being equal, if there's additional supply of a coin available on exchanges, it can deflate the price of each particular coin if the demand also doesn't rise in conjunction with the supply, right? So yeah, there seems to be a lot of sell side pressure for whatever reason. I'm not sure exactly what is causing it, but without me knowing the specifics, looking at this chart, I would not be super bullish about Ohm's short term. And this is all like, its on-chain metrics, I think, look fine, or sort of network level metrics. But short term, there's a lot of people selling. At some point in time, this could sort of revert back to buy side pressure. For now, it's not. But yeah, a lot of Ohm just consistently being moved to exchanges. So somebody is dumping Ohm on the market, and I'm not surprised to see it struggle in terms of its price action. So yeah, but generally, how many addresses were there, Brian? So network growth was like 1,300 a day. How many daily active addresses does Ohm have right now?
I'll check on that one more time.
I mean, yeah, fundamentals look great, look fine. How much?
Yeah, as of now, 1,950. It peaked at 6,800.
Yeah, that's obviously an anomaly because of its price action. But if Ohm is on average at this level of activity, I think it's fine. Like, sure, there might be some short-term price concerns, but 2,000 daily active addresses is a lot of network activity for an ERC20 coin. Like, if you put it against most coins that you think would have high network activity, I guarantee you that Ohm would have more. So if you put it against like Uniswap or Chainlink, I think it would, well, maybe not Chainlink, it wouldn't beat Chainlink, but it would probably beat Uniswap, it would probably beat IFI, it would probably beat Aave on a daily basis. So how many addresses does Uniswap have right now? It used to have a lot.
So on the shared axis, yeah, Uni's at about half of what Ohm is right now.
So you wouldn't expect that maybe, but Uni, there's less addresses using Uni on a daily basis than there are interacting with Ohm on a daily basis, right? So generally speaking, speaking here from experience, 2,000 daily active addresses is a lot of daily active addresses for an ERC20 coin. That would put it easily in the top 10 coins on the Ethereum blockchain. It obviously depends on the market activity, like back in February and March when everything was pumping, then those numbers were inflated for all coins. But with the correction, the lower the prices, the less there is in terms of network activity. So generally, the fact that Ohm is still maintaining the same levels of network activity even into the correction, and in fact, we are seeing a little bit of a divergence here with Ohm's daily active addresses now growing. If this continues, I think it's a good sign. Seems like it's far from a dead coin. Seems like it has an active community. I know it has some very influential backers. I've heard Tetranode speak about Olympus several times. So yeah, I mean, it's not a dead coin, but it does have some concerns in the short term in terms of just a lot of people seem to be dumping it for some reason on the market. All right, cool. What was the other coin, Max? Let's do one more and then we can, I think, end this stream.
The other one was Veracity, VRA.
Okay.
Exactly.
Yeah, so this is not looking good. If Ohm was looking very well, this is an example of a coin that doesn't seem to be doing all that great in terms of the network effect, right? So how many daily active addresses are there right now? Two?
Two.
Okay, so the day before that?
10, 11.
All right, so this is not great, obviously. Another coin that I don't know a whole much about, but generally speaking, if you have sort of 11 addresses interacting with the coin daily, I'm not sure what are the use cases for Veracity, but it's obviously not it's not a comforting sign for its holders. It just means that there's not a whole lot of addresses that are just, even for speculative use, using this coin. I think, generally speaking, there's something that has maybe Veracity moved into a different L1 or something, because all of a sudden back in March, we've gone from like a legit 200, 300 daily active addresses to now almost nothing. So I don't know if there was some sort of token migration, something that can explain this, but if this is legitimate, I mean, it's very difficult to spin this into a positive for the network, right?
Yeah, no development activity either, if this data is correct. Depends on that L1, as you mentioned.
Yeah, so let's also, I mean, on the other hand, let's just see how many people are selling it. So let's look at exchange inflow. I'm assuming daily active deposits are going to be low as well, but I'm curious to see exactly how much VRA is being sold.
It's just, there's almost no activity, at least comparative to where we saw in the early part of the year.
Zoom into the last like 3 months? We might be missing some data here. This could also be a thing. Almost nothing. So did it get delisted somewhere, or what's going on here? Okay, let me check.
It's on all exchanges.
Let me check. You can, Brian, maybe show us what the social metrics for Veracity are looking like. I'm going to check where it's trading and whether there were anything that can explain this.
Yeah, as far as social volume goes, really nothing overwhelming. Social volume has mostly declined. Dominance kind of hit its peak right when it did have this big uptick here in the early part of the week. So this could be why there's some interest, because there has been some volatility in the price, of course, getting up to about 7.6 cents at that local top. I presume this was its all-time high or close to it at 8.6. But dominance-wise, not really a lot going on. It was seeing a lot more attention back here about a month ago, October 23rd, October 12th. these were times where it was getting some increased chatter, so to speak. But as of now, not really being talked about a lot, which in a vacuum is actually more a good thing than bad. It means that if there is a pump, it's not going to, spike up the MVRV a lot, and a lot of people won't be ready for it. And of course, we do see this very short-term pump going on here just in the last day. Price has jumped about 17%. So that's significant and likely why there's some interest here from our viewers.
Yeah, so one other thing that we can look into that's also not like super optimistic for Veracity is we can also look at its supply distribution. And so just look at the supply distribution by balance of addresses, and then just show us the last group. So any addresses that are holding between 10 million or more than 10 million of this coin, you will see that this coin is highly, highly centralized. So the top addresses hold, I believe, 95.3% of total supply. So, yeah, I mean, yeah, you can take out all of the other parts, Brian, yeah, and just leave us with the biggest one. So there you go. That's 95%. And that's, by the way, that's a very static 95%. Like I'm looking at the last year of data. Since February, this number has not changed much. It has not oscillated much. There hasn't been a whole lot of distribution or redistribution of VRA from, one part of addresses or one group of addresses to the other. And keep in mind that there are only 36 addresses that are holding more than 10 million VRA. So 36 addresses, and I would assume there's even like less within that group of addresses, hold 95% of total supply. So that is a very centralized coin. It's very difficult to sort of be confident about the coin's organic price movement when you know that there's that a very small group of users has a disproportionate impact on the price action and the supply of the coin. So those 36 addresses, what I would assume, they are team wallets, exchanges, and then a couple of very big whales, maybe like VCs, early buyers, some angel investors, I have no idea, but a lot of like very, very early whales. So generally speaking, I'm much more of a fan of coins that have a more distributed or sort of decentralized, deconcentrated supply. Like I've checked out Ohm, it has about 76% of Ohm is held in that largest category of users, which is fine. I mean, 76 compared to 95%, it's a massive difference. So yeah, I mean, sorry to be the bearer of bad news. I mean, not necessarily bearer of bad news. It doesn't mean that VRA can't pump from here. Any coin can. But from a longevity perspective, I guess hope for Veracity to have a better network effect in months to come. 11 active addresses a day is just not a whole lot. It doesn't lend itself to a bustling community of people that are using this coin both for speculative purposes and other use cases. Seems like it's a little bit dead right now. So, yeah, sorry about that. All right, I think we have to call it the end here because we're already 10 minutes past the hour. Generally, let's just do a very quick overview on Bitcoin because I think where Bitcoin goes, most of the market currently is going to go. So there are signs that we might be looking for a short-term recovery or might be looking at a short-term recovery. So by signs, I mean there are pain markers. There are dips in network profit loss, suggesting that weak hands are selling at a loss. There are spikes in exchange inflow of Bitcoin. There are spikes in the large addresses and how much Bitcoin they hold. There are spikes in the exchange inflow of stablecoins to exchanges, which could suggest that people are exchanging their stablecoins for Bitcoin and Ethereum. There are signs that we are sort of, there's a lot of weak hands panicking and there's some strong hands buying. So that could be a sign that we are due for a leg up. Now, it's not all great news, even though social metrics and derivative metrics have stabilized somewhat. They're still in the undecided territory. We're still not in a period of time where everybody is completely exhausted from the market and no longer believes that the rally is possible. So if for me personally, I would not call this the true bottom. I think MVRV also, especially the long-term MVRV, has more downside from these levels before I can really say, okay, we're now definitely looking super healthy. But like, everything's relative, and compared to the like 2 weeks ago or 3 weeks ago, I think Bitcoin is looking much healthier. I think the entire market is looking much healthier. So, take that with a grain of salt. There are, and Max has already talked about, technical analysis and some signs that we might be looking at a wave 5 now and a short-term relief pump, maybe to even 60, 61K. But to me personally, I'm not entirely sure that even with that pump, that the dump is complete, that the correction is complete. So we'll have to wait and see. We'll be back a couple of days from now with a weekly report. I think especially like on Monday and Tuesday, it's going to be very interesting what the metrics look like after like the price stabilizes a little bit. What happens then? Are whales still accumulating? Is network level activity still growing, or is it going to go completely to the toilet? There's a lot of things that are gonna develop over the next couple of days that are gonna determine where Bitcoin goes next, I think. So, Brian, any last words before we end the stream?
Just want to thank everybody for joining and continuing to spread the word. Don't forget, SandGiving21 is the code you use up until Thanksgiving to get up to 30 or exactly 35% off of your first month as a Sandbase Pro member. So take advantage.
So guys, would be great as always. If you like the stream, like it, subscribe to the channel, and share it with other people. We're trying to push to 10K subscribers. Would be great if we can do it by the end of the year. Would be great if you can help us do that. So we're, I think, about like 1,300 off of the 10K number. If you enjoyed the stream, it would be great if you can tell more people about it. We're trying to do the same, just to have more people chatting with on the weekly basis, and more productive discussions for everyone. So we'll be back a couple of days from now, probably Monday and Tuesday with the next video, and then on Friday, another weekly stream. In the meantime, link to Discord is in the description. If you want to talk to us more, check out our trading channels where we share charts and just talk about the market even when the YouTube stream is off. All right, that's it for us today. Stay safe out there and have a great weekend, guys. Talk to you soon. All right?
Yeah, bye. Bye-bye.